Hello guys, as you might know, we have had a week full of huge companies reporting earnings. For today's video, I will analyze both Shopify and PayPal earnings report since both of them performed excellent during the quarter. Please smash that like button and subscribe since it really helps my channel out. Also remember that Amazon and Apple are reporting earnings today, so please comment down below if you would like me to do a video analyzing the FANG, Facebook, Apple, Amazon, Netflix, and Google earnings report. First, Shopify, ticker symbol SHOP. It is currently trading at a price of $1,014 and has a market cap of $120 billion. Now, Shopify is a huge tech company with a huge and excellent future beyond it. We all know that more and more millennials and Gen Z are buying only online since it is way easier and more convenient. Even more at this moment during the pandemic when it is a hassle to go out to any store, and that has also made a lot of businesses to move from physical stores to e-commerce, and even noticing that maybe they should close their physical stores and just be an e-commerce business. I mean, both small and big companies are doing that. A few weeks ago, we saw how Microsoft decided to close all of its stores and just focus on growing their online sales and services. That is why companies like Amazon and Walmart have been dominating the market, and Shopify is, in my opinion, the second biggest company in the e-commerce world after Amazon. Not according to their market cap, as you can see, their market cap is only $120 billion, but definitely in dominance and market share. And yes, I know they are not a platform that sells things online, but they are a platform that let any kind of person or business to create their own website to sell their products online. Obviously, the pandemic has also helped with Shopify growth and uptrend of the stock since literally every physical business had to move to the online sales, and Shopify is for sure the best and easiest solution for that. As you can see, Shopify stock has had a lot of momentum and people are still really bullish, mainly because of the industry Shopify is in. The stock is up 150% year to date and 216% since the huge downtrend in March. Now, there is also a big thing that might be either a concern for Shopify or just a good thing to expand to new markets, and this is Facebook Shop. As many of you may know, Facebook decided to come out with a new feature called Facebook Shops, where you can easily create a branded store for Facebook and Instagram for free, which are the two biggest social media in the world. The good thing is that Facebook decided to partner with e-commerce companies like Shopify, BigCommerce, WooCommerce, and more in order to let people feature or bring their Shopify stores to their Facebook and Instagram accounts. So yes, Facebook will integrate Shopify, but it can take sales or customers from Shopify if customers figure out that it might be better or easier to just put their products on Facebook Shops alone instead of creating a Shopify website and then feature it in Facebook Shops. Now, checking their earnings report, you can see that the growth that this company has had over years is impressive. They reported a revenue of $714 million for the quarter, which is a huge increase of 97% year over year. Again, 97% year over year. That is impressive. As you can see, this growth was because of a huge increase in merchant solution, which is their payment gateway, meaning that their growth was not only because of creation of new stores, but also because of a huge increase in online sales. Another great news and huge thing for the company is that they were finally profitable on a quarterly basis. Over years, while their revenue increases, their net losses would increase as well. Now, this last quarter, they reported an income from operations of $284,000, which is a huge improvement from last quarter. And for the whole net income, they reported $35.9 million, which again is a huge improvement. In my opinion, I would take into consideration mainly their income from operations, since their net income was really high because of the recovery of income tax, which is basically money that they decided to save in order to pay taxes, but apparently they saved way more than what they needed to. This means that they are finally able to make money from their operations, their main business as a store creating platform. Does this mean that this is the tipping point of their revenue? and would that support their current valuations or will still be overvalued? Well, analysts are expecting their PE to be almost 1200 for this year, which in my opinion would be really high, but analysts were not expecting them to have this huge revenue increase that they just reported. Something you need to take into consideration is share dilution. As you can see, they used to have 112 million shares last year, and right now they have 122.7 million shares. That is a dilution of almost 10% in a single year, and that is something that you guys need to have in mind before investing in this stock. But actually, I wouldn't blame them. The stock is really high and it is a perfect time to raise capital if they really need to do so. Now on their balance sheet, we can see that they have a huge cash position of $1.88 billion, which is an increase of 189% since December 2019. I do have to say that they have an excellent balance sheet with almost no liabilities other than the bills that they have to pay or leases and taxes, which from a balance sheet perspective, this is absolutely beautiful. In my opinion, you're paying a huge premium right now for this stock. Still, I think that we are going to see an infinite rise in the stock for the next 5 to 10 years because online businesses or e-commerce is going to continue skyrocketing year over year. So is Shopify at a good price to start a position right now? I have always said that if you are planning on buying and holding the stock for 10 to 20 years, then the buying price right now should be irrelevant. But obviously we also want to have a perfect entry point and not when the stock is overvalued. I do think that the stock is overvalued and I would like to wait and see if they are able to continue with this huge growth in their net income for the rest of the year, and maybe then the valuation will make sense. But right now it doesn't make sense for me. But if you're willing to risk it right now, then go for it and hold it for 10 to 20 years. Don't get me wrong, I do not see why Shopify couldn't beat the market year after year, since it is a huge growth company and the e-commerce industry will never ever disappear. Their revenue is exponentially increasing, their net income has turned positive, their operating income has turned positive as well. If that trend continues, then the stock is going to continue with its uptrend. Now, PayPal, ticker symbol PYPL. But before starting with PayPal, quick reminder, if you haven't signed for WeBull yet, make sure to do it and claim your 2 free stocks after depositing $100. One of those 2 free stocks could be worth up to $1,400. Link is down below in the description. Now back to the video. We all know what PayPal does, since I think most of us have used it to buy something online. PayPal have definitely revolutionized the online payment processing world by being available in 202 countries, having 80% of market share and giving people the possibility to do a fast and secure transaction. Since long time ago, it was really difficult for people to share their credit card information online, and PayPal has changed that. They have been able to grow a lot over the years. As you can see, their active users have been in exponential growth every single quarter. Obviously, they have some competitors such as Stripe, Visa, MasterCard, Apple, Google, Amazon, Alipay, but also a lot of them work with PayPal as well, but are kind of competitors. A huge thing for PayPal right now is their big move to enter in Asia and South America. PayPal acquired a company called GoPay, which gives them the huge opportunity to expand even more into China. GoPay has licenses for both online and mobile transactions and provides payment products for industries such as tourism, e-commerce, and cross-borders. This will make PayPal the only foreign company to obtain a license to process online payments in China. They also made a deal with UnionPay, which is the largest credit card provider in China. PayPal is currently trading at a price of $192 and has a market cap of $225.7 billion. The stock is up 73% year to date and 122% since March. They reported a revenue of $5.26 billion, which is an increase of 22% year over year, and a net income growth of 86%, which is a huge and really impressive growth. On their balance sheet, we can see that they have a total current assets of $46.5 billion and current liabilities of $33.7 billion, which leaves us with a current ratio of 1.38. I would like to see it higher, but it is really good for the company. also have total assets of $63.1 billion and total liabilities of $45.5 billion, which leaves us with a total debt to asset ratio of 0.72, which is pretty high actually. All this means that they know how to handle debt, their growth in earnings is exponential, and is a well-managed company. If you ask me, PayPal is a good investment for the long term because, as I said with Shopify, the e-commerce world is an industry that will not disappear and still have a lot of room to grow. They were the pioneers with the online payment processing, which is what differentiates them from their competitors. They also have another platform called Venmo that enables transfer money between friends and family via mobile devices completely free, which was a game changing at the moment, and now Zelle has done the same, but Zelle is connected directly to your bank account. Obviously, PayPal have to be careful with the competition with Visa, MasterCard, Square, and now Zelle, but they have a huge advantage here, that is the great expansion plans in Asia and South America, which is a huge opportunity for the company to continue or even accelerate their growth. The thing is that this expansion and growth might be already priced in the stock. Remember guys, I'm not a financial advisor, so do your due diligence before investing in any of these two companies. Hope you really liked the video. Please smash that like button and subscribe since it really helps my channel out. Thank you and see you next time.